Hello and welcome back to the AltFi Digital Summit. If you're just joining us, my name is Daniel Lanyon, Editor-in-Chief of AltFi. We've got a really cracking session for you up next. We have Anne Boden, CEO of Starling Bank. Hi, Anne.
Hi, Dan.
How's it going?
Very well, thank you.
Excellent. Where are you? I'm guessing at home.
Yeah, I'm at home. Yes, we've been home now for about sort of 6 or 7 weeks, and things are going very well. You know, Starling is working very well from lots of different locations. So our 900 people are working from home.
Wow,
and working very successfully. Yes.
Incredible. Well, there's so much that I'd love to cover, and there's lots of interesting things to talk about. But first of all, we're just asking all of our speakers if you had some advice for entrepreneurs or business leaders in general, based off this sort of period, the last 3 months, say, what have you learned, and what maybe has changed for you as a leader?
I think the important thing is that as entrepreneurs, we are used to things changing. We're used to being very adaptable and taking advantage of the new circumstances. At Starling, we've embraced the new normal. We were very quick to settle in different locations. We were very quick to actually start launching products in this environment. You have to listen to what's going on around you. The old world is no longer relevant in some cases. You have to grasp every little bit of feedback you can get from how people are now behaving differently and respond to those new cues, because that gives you advantage. But as entrepreneurs, we're good at this. We're good at actually getting down and making sure that we do a good in all circumstances, not just when things are going as normal.
Excellent. Well, as I'm sure most businesses, there are of course challenges, but I feel like Starling Bank has had a reasonably good crisis so far. Not least, you've been sort of accelerating lending very much with particularly on the SME side. Let's talk a little bit about the SME banking proposition. So I think in the last week, certainly over 100 million, I think, or several million. You got the figures there, and has sort of been lent out.
Yes, I just looked it up before I came on. We have 340 million currently being processed, and of that 340 million, we've already paid out 263 million. So we started this on Monday morning. We have a huge demand. We have a totally automated digital platform for processing these loans. And this was the perfect opportunity to use it at scale. We benefited from the Capability and Innovation Fund just over a year ago. That awarded us 100 million to build SME tech. And part of that was building out a great SME lending platform. And timing's everything. We needed this platform on Monday. We'd switched on the machine. And we paid out and processed those loans very quickly. So 263 already paid out, and we started on Monday.
That's incredible. So I guess that sort of accelerated a particular area of business for you. But have you sort of noticed, I guess, looking across the fintech sector, that there may be sort of other breakout technologies or subsectors of fintech that might benefit? Is there anything that you have particularly noticed?
Yeah, we're listening to what people want. We launched a connected card several weeks ago. We were approached by many customers saying that they were self-isolating and they needed a way for their helpers to go shopping for them. And within days, we launched a connected card connected to your main account, where you could actually place funds and you could see the shopping that went on by the person helping you. And we had within a day's 10,000 or more customers coming to us for that product. A couple of days later, we launched a product for check imaging, so people could submit their checks via the app. So it's the important thing in this environment, in any change, is that you don't stick your head in the sand and pretend it's not happening. You embrace it. You figure out what customers really want. And what we have been doing is launching new products, and in the last couple of days, really getting money and finance into the hands of SMEs that really need it. So this has been a very, very busy crisis for us. We haven't furloughed any staff. We have continued hiring throughout the process. Our customer numbers are twice what they were before the crisis.
Wow.
Nobody wants a crisis, but we have embraced that crisis, figured out doing the right thing for customers in this particular era is very, very important, and we're doing well because of that.
Interesting. I should just, as an aside, speak to the audience and just say, please do ask a question in the chat, and also do vote in our poll, which you can find next to the chat, which essentially asks, will a European neobank be acquired in 2020? Which I guess is a nice segue to ask Anne all about how you currently see the long-term plan for Starling. I think you've been pretty public before about saying that an exit has always been on the horizon. But has that sort of changed at all? Is a stock market listing very much attractive now? What's sort of the long-term sort of corporate plan for Starling?
I think in this environment, most people's plans have been pushed out a year. I think it's fair to say that for the very things that have to change. For us, certain elements of our business have really rapidly expanded. And certain areas, because we're so busy with those areas, we've had to put in the back burner for a while. Our UK business and our lending business have really grown. Our business current accounts are really, really popular. We decided to postpone our European license for 3 or 4 months. So our strategy is slightly changed, but actually, if you look at the whole numbers, we are probably going to be roughly where we were planning to be, but 6 to 9 months out. So yeah, it is a listing in our sites. It's not going to happen this year or next year, but I think it's probably going to happen in the longer term. I've always said that I didn't start a bank to sell out to the big boys. So it's probably still going to be an IPO for us eventually. But I think being realistic, it's not going to be next year.
And you're looking into your crystal ball is something I want to touch on in a few areas, but I'm genuinely sort of really interested to know for yourself, what is your own long-term plan? I mean, would you do another startup again potentially in the future? Would you like to be an investor? Are you an investor already?
I'm not an investor already. I get lots of offers to invest in businesses, but the only thing I'm investing in is Starling. I get lots of offers to do non-executive work. The only thing I'm going to invest my time in is Starling. I think that Starling is on its growth trajectory. It's building, it's growing. I have absolutely no time for anything but Starling. And I think the majority of the senior executive team at Starling think the same way.
Very good. So yeah, just talking about the crystal ball, I'd be very interested to know how you sort of see, something you've spoken about a lot before, the sort of the open API economy coming to finance, and of course, open banking, PSD2 have been big drivers of that. But how do you feel? Things are moving. Let's say within the next 5 years, and I guess particularly for you at Starling. How sort of revolutionary do you feel that whole area will be?
Okay, I'm a big fan of APIs. I believe in the API economy. And I think it'll transform banking and transform lots of industries. I don't think open banking is necessarily how APIs are going to become ubiquitous in this industry. The open banking initiative was a regulatory initiative to try to make it happen. But you can't make things happen, real commercial things happen, by regulation. Sort of customer demand, the momentum of change will make the API economy happen. We have a thriving banking as a service business where we offer services to fintechs, other corporates, government, and that business is a solid business that makes us a considerable amount of money, and it is based on APIs. But I think we've yet to see the big movement whereby banks and corporates link together in using APIs to the full. We hope to be at the real leading edge of this. We have lots of contracts providing banking services to other organizations using APIs. But I think the big rush towards APIs is yet to happen. And I don't think it'll be done through the Open Banking Initiative.
Okay, very, very interesting. Now, I just wanted to touch on a few bits of news this week, and really just see what you thought about them. I mean, I guess the first one very much is about Starling Bank, so I'm sure you'll know all about it. So you have struck a partnership with Funding Circle,
Yep.
who I'm sure everybody knows, but if they don't, is an alternative lender for in the SME space, and I think the deal is sort of circa 300 million that of your money that will be channeled through Funding Circle's loan marketplace. Can you tell us a bit about how that happened and what was some of the thoughts behind it?
Yeah, a couple of things. First of all, Starling is growing very, very fast. And our customers are a slightly different demographic to the normal neobank customer. They tend to hold very big balances with us and use it for their transactional accounts. So we have higher value transactions and we have high balances. So this means that we are prepared to back other platforms and invest through other platforms to get money to SMEs. We are, and we've done a 300 million deal with Funding Circle, whereby we can lend through their platform to SME customers. And this is part of our overall commitment to SMEs. We are members, we do our own SME lending. We have done B-bills lending, which is bounce back loan lending. We do coronavirus business interruption lending as well. And now Funding Circle is the first of perhaps a number of sort of routes to get funding out to SMEs.
And, I mean, perhaps you could just share a bit with us, how did the deal come about? Is it something that's been long in discussions, or is it something reactive to the coronavirus?
No, we've been talking to Funding Circle for quite some time, and we know the organisation quite well, and we wanted to put to help both the general SME world and to get more money to where it's needed. And Funding Circle have a great platform to allow us to do that.
Interesting. I just want to move on to sort of broadly looking at the digital banking space here in the UK. To what extent would you agree that it's becoming quite a crowded market? Perhaps one where not every bank can sort of compete. And obviously, we've seen N26 exit the UK this year. Also, we saw news today that Monzo's latest valuation, implied by their latest fundraising, would be sort of substantially lower. Now, not speaking specifically on Monzo, but do you think that we will see, that sort of that hit to fintech, owing to its often, not always, reliance on venture capital and I guess moving into this more uncertain period?
I think the fintech scene is quite diverse, and lots of different companies with different sort of backgrounds, different sort of investors as part of that pack. I think that it divides into banks and non-banks. And the non-bank area, you can consider where you have peer-to-peer platforms, you've got the prepaid propositions. We're a bank, and in this environment, we are fortunate that we have balances that we can use for lending. We have, particularly Starling has other sources of revenue, such as banking as a service. I think that if you haven't got traction and you haven't got enough of a customer base, I think it's a very difficult environment. So I think it's going to be very much dividing into the haves and have-nots in some respect. We're very, very pleased that we are now at a size and have such traction and have such a customer base that it's in some respect we have that momentum to grow. No, we have never talked about valuations at Starling. We don't think valuation at one time, at one round, is particularly relevant. I hope that the industry as a whole starts being rather more conservative about talking about high valuations.
Okay, very, very interesting. Now, lots of questions have come in from the audience, and I think it seems like a good time to move to them. I should just say, Alison Harwood was keen to hear more on the Funding Circles partnership, but I feel we sort of covered that. And so let's go to Jennifer Harrison, who is asking a question from Sydney, Australia. And could you comment on the importance of mindset changes, whether some of the final walls of resistance to digital banking are crumbling?
I think there's resistance in two areas: a resistance from customers and resistance from the establishment of regulators and investors, and then it's the bankers themselves. And I spent a long time working for the traditional banks before I quit to start a new bank, because I felt the technology was ready, the people were ready, and the regulators were ready. The only group that weren't ready were the bankers themselves. And I think now, for the last 4 or 5 years, I think the big banks have heard in their boardrooms so much about having to catch up with digital that message has really landed. So I think we're now in a new era. We're not really a challenger any longer, the digital banks. We have substantial customer bases. We've still grown very, very fast. But I think we have the advantage now that digital is the default. It's not, when you talk about banking, people expect banking to be digital, to be available on your app. This is now the normal. And if you're offering a non-digital proposition, it's probably something that people are actually plotting the demise of.
Okay, very, very interesting. We have a question on culture from Rahul Jindal. He asks, what is so different in Starling's culture compared to traditional banks that allows it to work effectively with so many partner firms? Is that a lesson you learned working in a traditional bank?
I think that Starling moves very fast. Starling is a very collaborative organization. We're very good at listening to what the community is saying, what the world is saying, and trying to give it to our customers. And our marketplace is how we make that happen. So what's different to our culture? Our culture is that we're terribly honest. We're honest with ourselves. We're honest with the market. We're honest with the people that assess us. And sometimes we're not the best provider of those products. And when we're not, we use a partner, and that partner comes into our marketplace.
Okay. Interesting question here, just going back to SMEs, and I suppose, it may be fairly obvious now, but I feel you guys have really, really concentrated on the SME segment, perhaps a little bit more than say Monzo and Revolut, who both obviously have business customers and are focusing there. But so aside from lending, what additional services are SMEs telling you they need more help with to come out of the crisis? And that's a question from Paul Loberman.
So at this very time, the questions we hear from SMEs are, we need lending to rescue our business. And that's what we're working on at the moment. But those SMEs also need services to optimize the administration of the businesses. At the very small end, they're not going to buy accounting packages. They don't have the time to integrate them. They don't have the skills to make them all work perfectly. We have a set of products whereby those SMEs can produce invoices, they can reconcile their accounts. So we have a series of administrative services that can help SMEs with their business. But today, this week, we have lots of SMEs that desperately need service from their banks. And it's not just Starling, it's all banks that's serving SMEs. We need to get the right funding to them as quickly as possible. And the special thing about Starling is that we can respond quickly and we get things done. And when we were told that an objective of HM Treasury was to get this money to SMEs, we responded and we got ourselves up and running in a week. We got our systems that we've been developing over the last couple of months up and running, and we've managed to actually lend 363 million over the last couple of days.
So just jumping back to incumbents, and obviously, as you said, you've worked for a number of them. So this is from Sachin Aurora. What was your reaction to the news RBS was shutting down its own digital offering, Bo? Did that seem inevitable to you? I know you've spoken a lot before about the fundamental competitive element being cost bases for the likes of yourselves. And did that feel inevitable? Do you feel that there's been any sort of catch up from incumbents?
I think the important thing is that the big banks will copy everything we do. Okay, they can't copy our cost base. And one way of actually getting a new platform is to do a flanker brand such as Bo and Metal and whatever, and use those flanker brands to develop the technology, start from scratch, and create a new customer base. It seems good, on the playbook. Consultants can come in and tell you that, but actually making it happen is very, very different. You can't replicate the terror of entrepreneurship in a department within a big bank. You can have an office, in a different part of town. You can strip the plaster off the walls. You can tell the divisional MD he's a founder, but it doesn't make the difference that unless you sell product and make a product that people want, you won't raise the next round of funding. And without the urgency, without the focus, you're not going to get it done. And also, with every 100, startups, 1 or 2 will actually get to be a substantial business. If you try to create one spin-off, one flanker brand, and you expect it to be the successful one, you don't know and understand how odds work.
Very interesting. Yeah. I actually wanted to ask earlier. I'm not sure if I've ever heard you sort of talk about it, but what was the earliest? I don't know. What is the earliest signal that you kind of that you saw working in the sort of 2008 2009 banking industry that made you think that there might be the revolutionary idea of launching a new bank and obviously it was a few years after that period that you started to move on it. But what was can you sort of remember the earliest I don't know what you call it, but the genesis of the idea, I guess?
Yeah, I think it was The story is that I was, after the financial crisis, I took some time out and spent some time with fintechs. I then went in to be chief operating officer at Allied Irish Banks in Dublin to do the turnaround. And that was a wonderful experience, and also a horrible experience. The country had been wrecked by banking, and I was there to turn a bank around. And whilst we were very, very successful and we managed to sort out the numbers, I started thinking about, even if I did absolutely everything to improve some of those processes and got them best in class, I couldn't really change it. I couldn't get a 10 times better solution. So I went around the world talking to banks, and they're all roughly doing the same thing. And I came to the conclusion that the easiest way, the most successful way of really transforming was to start from scratch with new technology, a new way of approaching customers, and a bit of an audacious vision. So I quit my job to start a bank. I thought it's quite easy to raise money. I was going to start a new bank that's going to have all this new technology and a new business model. But it took a long time to convince people that it's possible to do this. And here we are, six and a bit years later, and now we are seen as being, this is how it's done. So it's been quite an experience. And I very much, at the time when I took the leap, most people thought I was crazy. And it's been a lot of hard work, but I've had some great people help me along the way. And the special people at Starling that have worked night and day over the last couple of weeks to get this funding to customers who are badly in need of it, are Starling people through and through, that believe that technology can enable, that real focus can make the difference. And these great goals and audacious goals are worth embracing.
Oh, fantastic. I suppose something I was going to end on, and it's a question we have asked to other CEOs as well. But my own sort of pet theory, which I slightly stole from a presentation I saw a few years ago, is that the history of banking, at least in the UK, is one of who survives major crises, or major global events. And I guess 1929 wiped out sort of 80% of the existing banks at the time. And you have people like Barclays, Lloyd's pull through it, and Coots and Hawes and Co. and that sort of thing. Do you think that there will be any substantial lasting impact on the banking sector from this crisis?
Yeah, I think that I think we're going to see the end of the branch, and it could actually. I think it could push us away from cash towards contactless and digital wallets. And I think all of those things are good things. So what crises normally do is to take a trend and just accelerate it. Branches were failing to find a real role. Cash is very expensive. We've had more and more contactless in recent years, and people are using their digital wallets. I think this crisis, the coronavirus crisis, will make all those trends happen quicker.
Okay, very good. And we've run out of time, but thank you very, very much for joining us, and best of luck with everything you're doing over at Starling. And obviously, we're really interested to see how everything develops. So thank you.
Thank you for inviting me.
Pleasure. Thank you.